All right. Thanks for joining us. So to cover a little bit about blockchain business, a diverse across a lot of green energy applications, vehicle identities, supply chains really big right now, the healthcare, media and entertainment, insurance, and so on. So to start off with the supply chain, as you know or may not know, pretty much the ledger technology behind this will kind of enable more like accurate kind of tracking systems on orders. It will be faster, definitely improve coordination is a big piece. And reduces bottlenecks, improves logistics and whatnot. So that'll be big for businesses, cutting costs and whatnot, and also keeping track of deliveries and what have you. So next we have healthcare. So this is actually quite interesting in the sense that having the ledger technology, it reduces any possibility for kind of like tampering with records. As I have here, 51% of the network has to support a change. So it also helps reduce costs, as I said, protects sensitive info, and keeps everything in check while having a decentralized, record of it that can't necessarily be changed. As for media and entertainment, pretty much it eliminates content aggregation. So it's since it belongs in the ledger and everything's kind of exists ownership, it's really hard to pirate material and content, and you kind of have your royalty distribution. Artists are getting their correct kind of compensation rather than all the different outlets kind of trimming off the possibility for profits. So this was a cool stat here. It reduces the loss and inefficiency 38 cents to 46 cents per dollar. So, I mean, advertisers lose $19 billion to fraud. And by next year, forecast 44 billion. So pretty nuts. Blockchain would obviously help, reduce that kind of fraud and allow artists to kind of get their royalties while cutting down on the middlemen, and would certainly help kind of profit long term. As for renewable energy, there's a few pretty cool real world examples. In Estonia, funny enough, we actually studied this in our international business class this year, but they operate on the blockchain technology for voting, taxes, healthcare, and more. So, and Australia is kind of looking to, take what Estonia has done and kind of build it on a bigger scale. Estonia is a really small kind of community. So applying it on a bigger scale requires a lot more kind of R&D and thinking about how the logistics of it will work out. Spain already has some of their infrastructure, using the blockchain technology and whatnot. But, as I have over here, it allows for the ledger system will allow for a high volume of transactions processed. And, that's our strategy. For insurance, kind of feeding off that underlying theme of the ledger system, if everything's it can't be necessarily changed, it prevents fraud for insurance companies. It also protects the consumer in a lot of ways, and having everything written down, it can't be changed. Their claims are what they are, and the companies can't necessarily catch people on as many premiums and whatnot. There's micro insurance. There's all sorts of different aspects of the way insurance works, which would streamline their process and consumer expectations. Services would be offered faster, and definitely would disrupt the current space and the way they operate right now. And it would be beneficial to kind of the insurance companies and your kind of broader consumer for sure. Just moving off that, we have kind of 6 different kind of major pillars here on the major things that would be affected. We have risk assessment, quoting, onboarding, claim registration, claim assessment, and payment closure. So we just kind of dive into a few of these things that kind of stick out to me. Payment and closure. So automatic payments, smart contracts, and transparent proof of claim settlements. I think that's going to be really interesting to see, and how everything will kind of be recorded. Proof of claim and smart contracts are a really interesting space. I don't think we have enough time to touch on today, but really cool stuff for sure. And kind of bouncing around the slide. As for risk assessment, Everything's kind of verifiable. You can share your personal info. They're talking about implementing different algorithms to assess like customers' risk. Everything would be like pretty transparent in terms of like exemplars on how people qualify for different plans and whatnot. And as I have here, there's a lot more transparency that would exist, especially on a shared interface. Same thing with quoting. Everything's kind of recorded. Sets a lot of precedence, and for consumers, it kind of protects them as well. And yeah, absolutely. So those are kind of the three main things that stuck out to me upon kind of doing some research, and a lot of cool stuff given a shared interface and everything being recorded. So here I have a little YouTube video we can check out. It's a pretty cool video. It talks about how Bitcoin started as the blockchain, is now kind of going into business. I know Artie might, not the biggest supporter of the Bitcoin blockchain kind of thing, but we'll check it out anyways. What's really interesting is
Yo, I think we're having some audio problems. I think, Kev, you gotta press a setting.
Say again?
You gotta press a setting on your screen share to also share the audio. It'll be like, I think it's a little like the up arrow.
The actual PowerPoint. And
shoot, clouds. All right. There we go. Ever since I got by that spider. We'll have to wait for an ad, but can you guys hear that okay? Was that
no, you got to share the actual Chrome application.
Do you want?
You can't share your screen.
I guess we will. Not sure how to do that, but we'll give it a skip, I guess.
I think you can like if you click the audio thing on Zoom, like I think it allows you to choose where you're, like if you play video, you can like share the video's audio.
Is that working?
No.
When you press share screen, you should be able to click more audio settings.
Yeah, you can try unshare and reshare again, and then
okay. Thanks so much. Sorry for the delay, lads. Yes, no?
Still no.
All right. I guess we'll give it a skip then. That's all right.
No worries.
Unfortunately, it was a pretty cool video, but they kind of just dove into the history about how blockchain was kind of moving and being applied, and covering a lot of little interesting niche applications of the blockchain technology in the business world. But I'll drop the chat, or I'll drop it in our chat, and whoever's interested can for sure check it out. So here I've done some research on some pretty cool case studies, so real world applications of the technology. So just going back to kind of music and entertainment, Citibank kind of studied on how artists only receive 12% of the profits, and kind of how to try and address the situation using blockchain. So pretty much like there's no really exact record on the profit and loss on the way like profits are distributed from like revenue streams off of music, like Apple Music and whatnot. There's a lot of different middlemen. Like you have like the producer, and, like the licensing, and you got to pay so many different people. So there's not distribution of profit. So in applying the blockchain technology, there's a more accurate representation of where the money's coming from and who's it going to. So as such, like we have here like 23 billion is the cost of fraud. I kind of touched on that earlier in just the music industry, hidden ads and whatnot. So blockchain definitely offers protection upon that, and would allow artists to try and like a fair share kind of their profits, and not letting people who shouldn't be entitled to kind of just doing mundane tasks getting big kind of paychecks. So definitely a pretty interesting application there, as we already talked about. But to see Citibank try and look at some solutions is definitely some cool initiative on their part. So another one is just the modernization of kind of supply chains. Um, Interestingly enough, like international trade hasn't seen many like upgrades in 30 years I have. So pretty nuts. And that's kind of a major issue. Lots of inefficiencies, bottlenecks, lots of costs that shouldn't necessarily be there, but people haven't committed necessarily the infrastructure and time to try and solve this issue. But kind of the solution that a lot of people are studying is having this like documents transacted like in real time would slow down a lot of the costs and going back and forth like time and effort and like just reduce kind of time and time spent in trying to complete a mission, I guess. Definitely minimizes just a lot of risks. Lots of applicable examples in the agricultural field, mining and shipping, just because of how much communication is required there. Their documents, especially in agriculture, like thinking about how things need to be shipped in a timely fashion, like short shelf life on produce. And as I have here, as we touched on earlier, like reduces kind of the emails and back and forth, like when the transaction's been filled real time. There's no going back. There's a record, and that's a big thing in kind of reducing time spent. So they've run some simulations on this kind of application of blockchain in the supply chain revamp, I guess, and they have like 60% automation. It will increase 70% of transport speed, 90% increase in reduction of key like rekeyed entries. So people make mistakes, like especially the data, like filling out serial numbers, 90% decrease there. And another 80% decrease in errors and inconsistencies. So just like, I'm sure you've all received a wrong order at times and you got to call back and, go through the brutal customer service, like having everything kind of automated, there's less, it's less susceptible to kind of human error. So absolutely very interesting there, and see how that will play in the next few years. Finally, blockchain and real estate investing. Now, and thinking about this, like for me, it was pretty interesting, kind of diving into the codes of how this would work. And I've actually like listened to like a lot of talks and like how like people are thinking about how NFTs could be like the deed to your house or something. Everything could be. Stick and not go off on a tangent on some kind of YouTube documentaries, but French like kind of real estate fund manager. They looked into blockchain to try and like, I guess, optimize the process, distributing like fund shares to kind of investors and whatnot. So they were looking to try and address their major problem of costs in registering funds, like maintenance for accounts, dealing with customers, lots of kind of hidden costs like that you wouldn't necessarily think about, but just admin. And they had this interface on their company website for clients. And when you'd have to register, you'd have to kind of pay these fees to kind of receive documentation from the government, like hit it with your, I guess, 401k in the States and whatnot and what have you. But the vision that they kind of had, and they're still carrying it out, but they'd have one central or decentralized, I guess, interface that everybody would be able to see like instantaneously. They would kind of screen applicants on the basis of like their capital, like liquidity, if you're going to commit capital, if like the risk of withdrawal and whatnot. And they're trying to minimize this investor subscription. Right now is 100,000 to bring it down to €1. The reason why it's so high right now is because, as I was saying, there's so many kind of fees in registering accounts, registering investors. There's a lot kind of behind that. But to try and streamline that and whatnot, it would make their fund more accessible, kind of boost their business, boost like their investor base, their kind of assets under management, while also kind of protecting investors and giving their kind of a cheaper cost of admission, I guess. Just to kind of continue, they actually used they were experimenting on the Ethereum like blockchain. So as we kind of move forward, I know there's the new like infrastructure bills and whatnot, and Biden's doing some stuff to try and get like crypto into kind of capital gains brackets and whatnot. But at the time, they were kind of looking, they're kind of navigating the rough waters of compliance and whatnot. But what they were doing is they were making this screener similar like how insurance companies are integrated. They actually took an idea, but you'd plug in your personal information. It would be completely anonymous. Like you'd submit bank statements and whatnot, and all these different kind of artifacts of like, I guess, personal artifacts. And what it would do is it would assess your risk, and then you'd kind of be like whitelisted and be able to invest in the fund, and the fund would be comfortable with your business, and you'd know that, you know, you're, I guess, safe with a pretty high-end fund on that side. Payments were processed instantaneously. Everything's documented, so you have a record of how much you invested. It was real time. Your money could start getting to work right away. And they've actually had they did like test runs and whatnot, and they had to eat quite a few fees and just kind of streamlining the whole process through their test phases. But the fund itself attracted many more investors just because of how accessible it was. And as a fund, they improved like pretty significantly, returned a lot to their kind of investors. And it was pretty unbelievable to see kind of applications from, they took an idea from insurance and brought it to real estate, and a kind of hedge fund, real estate focused asset manager. So it's definitely pretty unbelievable to see and how things could be inspired. And I think it'd be pretty interesting to see maybe how that works in the entertainment and reducing kind of royalties given to middlemen, and how that can be applied to different spaces. And who knows where it'll go 10 years from now. But lots of cool things to speculate about. But thanks so much for listening. And thank you.
Thanks, Kev. Wait, Kev, one question for you. Out of all the different like categories you talked about, what do you think is the most, like, which area do you think has the most potential for blockchain disruption?
I thought the healthcare space was especially like interesting, and reading like how much money is being put into the kind of the infrastructure to get behind this was especially cool, and how like kind of the sizable effect to it. But I guess like in looking at the stats and how much money could be saved and like boosting the bottom line, it seems like the music industry is kind of the most especially like smaller artists, and getting their work out there, getting compensated and what have you.
Yeah, no, that makes a lot of sense. Do you know any companies operating in any of like those fields?
There's a few small hospitals actually in the States. I think there's one in Washington, if I remember correctly, that began migrating their data over, but they might have just been doing like a kind of mock simulation and getting ready to bring everything over. But as for the music industry, no, I think it's very early stages, and it requires like a lot of kind of moves in the space before it's kind of ready to take on that kind of responsibility of housing that
music
kind of
industry.
data.
I think there's one company called Audius that does something similar to that. Other than that, I don't know. I don't really know their competitors at all. But definitely really interesting to see how blockchain can be applied outside of just like DeFi and like crypto.
Oh, absolutely.
Obviously, finance is like the first place, but it's at the end of the day, like the blockchain is a really, really interesting technology that can be applied. Like as you've shown, it can be applied to a lot of different places. So
and even in insurance. Yeah.
Dropping in prices and losing billions of dollars in value. But what's really interesting is as that's happening, companies from all over the world are starting to take a renewed interest in the underlying blockchain technology. These big enterprises are looking for other ways that they can move value from one point to another using a blockchain without unnecessary middlemen. If you look back over the history of blockchain adoption, the first use case was Bitcoin, the cryptocurrency. And its big selling point was that anybody could use it, and you could move value from point A to point B without any middlemen. The downside to that, though, is that the transactions were all out there for anybody to see. It only took a little bit of work for people to start to triangulate who these identities were and to learn about how these transactions were being used. Now, for a big enterprise says this just can't happen. Not only to protect the privacies of their customers, but for regulatory reasons. There's actually controls in place to ensure that these big enterprises aren't letting our information just go out into the world willy-nilly. So they're reaching out to third-party software providers who are creating these permissioned blockchains and building whole new ways of doing business that let them move everything from money to records of tuna transactions using a shared distributed ledger without the unnecessary middlemen. The biggest difference between these permissioned blockchains that enterprises are increasingly becoming comfortable with and the permissionless blockchains is where the source of trust comes from. In a permissionless blockchain like Bitcoin and Ethereum, the trust comes from two pretty simple factors: mathematics and electricity. But the downside to that is because you're trusting these outside sources, mathematics and electricity, the transactions tend to be a little more easy to view. Now, for enterprises, the group of people that need access to these blockchains is a lot smaller. This is what's called a trusted setup, or an invitation-only setup, which is why the blockchains themselves are frequently called permissioned. Now, what's really interesting, though, is that these two worlds, the permissioned world and the permissionless world, aren't diametrically opposed. They're actually on a spectrum, and you can have different degrees of permission and privacy depending on who you are and what you build. So what's happening now that these big enterprises are getting increasingly comfortable with using permissioned blockchains is they're starting to learn new ways where they can use public blockchains and the increased efficiency that comes from that, but in a way that still protects their users' privacy and hopefully complies with regulatory concerns. So because permissionless blockchains like Bitcoin were inherently financial in the beginning, most of the use cases out there are indeed financial. But what's really interesting as a broader sector of enterprises get involved is we're seeing all kinds of different ways that blockchain can be used. In fact, in the end, what blockchain really is just a way to prove that you've moved something from one place to another. And so we've seen companies like Bumblebee Tuna that has a long history of difficulty proving the origin of its tuna use blockchain to give consumers increased certainty that what they're eating is in fact what they believe they're eating. More importantly, that it was captured in a way that they find ethical. What Bumblebee has found is that to get the tuna from one place to another requires a lot of levels of the supply chain. And in order to give their end consumer that increased certainty that their fish hasn't accidentally captured something that was unintended or that it was done in an immoral way, they've got together all the data about how it was captured and given it to their customers. The problem with that solution is that it still relies on trusting Bumblebee. And Bumblebee isn't a data company. So what they did is they used a blockchain to give every level of the supply chain, from the fishermen to the packagers to the canners to the shippers to the grocery stores, access to the same distributed ledger. So you don't have to trust Bumblebee anymore. You can actually see into the core of the underlying supply chain, and if there is any fraud, if there is any concern, we know exactly where it came from, and instead of the feeling of being powerless, we can know exactly how to fix it. Another really interesting enterprise use case of blockchain is Golden State Foods. They provide food for some of the biggest fast food chains in the world, including McDonald's. So what Golden State Foods has done is they've actually moved the entire beef supply chain that goes into their hamburger process to a shared distributed ledger. They're taking what's essentially boring accounting software and adding on all kinds of fun bells and whistles. For example, the boxes that hold the hamburgers have thermometers in them and RFID chips, and the data is logged on the blockchain so that you can literally see as an object moves from one place to another. As one person takes custody over the burgers, you can be assured that the temperature of those hamburgers hasn't gone too high or hasn't gone too low if you're trying to prove that the food was never frozen. What's really important about this is for companies that want to be able to charge more for premium services, like, for example, that their meat was never frozen, can now prove beyond the shadow of a doubt that, in fact, the meat was never frozen. In other words, by using a blockchain, by moving that supply chain to a shared distributed ledger, we no longer have to trust Golden State Foods or McDonald's that your meat has never been frozen. We can trust the blockchain. One of the most valuable aspects of these enterprises adopting blockchain technology is they've given us a new way to talk about this technology. Cryptocurrency was inherently and is inherently difficult to communicate the value of. Enterprise adoption of blockchain is letting us track things that we can hold in our hands and in some cases even put in our mouths. Once we have that real world connection to how these products impact us and we start to go backwards to see how removing unnecessary middlemen can both speed up the rate that we're able to take care of business and let us do it cheaper, the benefits of blockchain become much more easy to understand. As enterprises get increasingly comfortable with using these permission blockchains, I'd be keeping your eyes open for them to start exploring other ways to use permissionless blockchains like Bitcoin and Ethereum to do the same thing, but with new imaginative ways to protect their customers' identities.
Yeah, dude, that was super cool. I think that was a great find.
Mhm.
Also, like, one more thing, like I just thought about that when I was watching the video about how like you can track stuff. Like Elon, I think like maybe a month ago, like sent out a tweet saying like if the World like Food Program thing can show exactly how like $6 billion can solve world hunger, he will sell his stocks. But like the one caveat is that it needs to be like public, like open source accounting, so everyone can see how the money's being spent.
And
So
they didn't want
this
to
is
do it.
like a place for innovation, right? Like
Mhm.
some pretty cool stuff here.
Mhm. Absolutely. I guess Elon maybe called their bluff on that one, but
Yeah, no, exactly. And like there's so many companies like right now they're trying to say, hey, like we're green, like carbon tracking or like things like that. And like putting all of that information on the blockchain just makes it extremely verifiable and like makes it authentic. So I think there's a lot of that, like David, and like exactly what David was talking about. I think there's a lot of good opportunities here.
oh yeah.
I kind of don't really get it. So they hand stamp each burger patty and check to make sure it's never going up like 5 degrees higher or lower, something like that.
Yeah, exactly. Like they just have like a thermometer thing, right? Like within like the box.
But won't that like
And
cost a lot though? Like how
oh,
I don't see how that gets like I don't see how that like saves money because like isn't that aren't you using more resources to measure every single part?
No, but you keep it in like the pallets of the burgers. Like it comes
I
in like
see.
one. Yeah. So they just throw a thermometer in it that logs, I guess, live temperature.
Got it.
Sweet. Thanks, Kevo.